We are going to do analysis on the week 4 of July on oil, silver, and gold. I would like us to start with our fundamentals. We saw what happened last week, that we had some fundamentals that came out which we didn't expect. They now pull back gold, oil, and silver. That's why it's always good for us, whenever we are trading, we should be always expecting the unknown. The unknown always happens in trading, in fundamentals. So in effect, today we are going to be looking at the fundamentals that we are expecting next week. And like I said in my group, this week is a very hot week. It has a lot of key fundamentals which are very, very crucial, very important, that we should listen to it, and we should be sure before we make our decisions. Though that we will be following our trend, because it is said that the trend is your friend. So right now we will be going straight to the fundamentals. Fundamentals for this week, we are expecting a little rally on Monday, being that on Monday we will be seeing a little US key important data coming out on that Monday. So invariably we'll be seeing a little spike in the markets. So we should be very careful. Like on Monday we have market PMI composition, we have pending home sales. So these two data are very, very key. They also help in evaluating the GDP. So on Tuesday we don't have much important fundamentals, and there's something I would like us to note, that any week that we have non-farm payroll coming out, we shouldn't be expecting much move in the market until that non-farm payroll day, because investors will be waiting to get the info of what that non-farm payroll will be. So they'll be pricing into it. Okay, so it's invariably that this week we might not be seeing a much move within Monday, Tuesday. Okay, like now from the fundamentals, on Monday we have little fundamentals, about two key important fundamentals. Then on Tuesday we could see that what we should be concentrating, like I said last week, that we should be watching JPY pairs, and we saw what happened last week on JPY. Okay, so we'll be watching JPY pairs, and this week now on Tuesday you will see that it has, at the ending of Monday entering Tuesday, there are little fundamentals that are key, like unemployment, this unemployment and retail trade. So they are very important. So we should be very careful with this pair, JPY pairs. Okay, now on that Tuesday we should well, in a way, watch GDP, because we have mortgage approvals, okay, which is little, and also we have net lending to individuals. These two are also a little key important fundamentals. So we should watch them. Okay. Then on the US side, there is no much data except for this consumer confidence. Okay, which is also a key data to watch. So that Tuesday we should just be very, 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 very careful, because is going to be consolidating much on that day because there's no much data to move the market. And mind you that this week is a week we are expecting non-farm payroll, which is on Friday. Okay, so now then we go on Wednesday. On Wednesday is a day that I will tell you that market will rally, but it will rally under pressure of uncertainty. Okay, because if you look at it now, you see that JPY has some important data there. We also have Euro. Euro has some important data that on that Wednesday. You can see that we have service sentiment, we have economic sentiment indicator, we have industrial confidence. So these things are now very key, important data we should be watching out. So this data now, remember I said that if we are having non-farm payroll, that even at important data that are coming out, we should be very careful because market will be ranging, waiting to get the key, the main data, which is the non-farm payroll. And mind you that this week also, on this same Wednesday, we have some key data coming out from Euro. Also, this is Germany now. Consumer price index is coming out. So there's a possibility that we'll be seeing a little rally on Euro. Mind you that Euro has been on a sell. It has been on a bearish move since this month, and we were like expecting a little pullback before the down will continue. Okay. Now on this same Wednesday we have ADP on an ADP employment change. Also we have GDP from US. So you can see that it is a very key day. This Wednesday is a very key day to watch. Okay, it's a very key day to watch. After the GDP, we will see we have interest rate decision. That notwithstanding, we also have Fed monetary policy statements. Okay, so you can see that it is piled. This Wednesday is piled up with a lot of key fundamentals coming out from US. So we should be expecting a lot of moves on this day. So then if we go to Thursday, on Thursday we should be watching GDP. We should also watch AUD. Okay, we should also watch JPY and also Euro. So these are pairs to watch on that Thursday. Euro is very important on Thursday. We should watch Euro on Thursday because it has key fundamentals, and US has lesser key important fundamentals, which we know that there's a possibility that this might not give much rally because the next day is a non-farm payroll. So investors will not key into this data. Okay, so but on Friday we have key data coming out that day. We have from China, we have manufacturing PMI, which is very, very important. People are already watching China because investors are seeing that China economy is coming back. Okay, it's coming back. So there's a possibility that this data will be very, very important. It will be very, very important because it will help to analyze the GDP of China. So also, we should be watching on that day. Mind you, that day is the key day. We have our non-farm payroll. So the two key things to watch on that Friday is the China manufacturing production PMI, and then the non-farm payroll. After the non-farm payroll, we have unemployment rate. Okay, then after that Friday is full of US data. So we should be very careful. So invariably this week we should be watching from Wednesday. Markets will change from Wednesday. We will be seeing a little rally from Wednesday, and we can be able to get our trend from Wednesday. So we should be very careful and be alert on all these fundamentals. Don't forget that fundamentals always beats the technical analysis. Not minding that after all said and done, technical analysis take back the trend. So we should be very careful. Always trade what you see, not what you feel. Okay? Now let's go to the charts. We are starting with silver. We are going to be starting with silver. So silver, from what we saw that happened last week, we noticed that there was an unknown fundamental that came out, people not expecting it. So it now pulled back price of some of the safe havens commodities and currencies. So we saw what happened because of some attacks that happened in Libya, some that happened in Iraq, and we also saw the story of the Russian sanctioning, the Europe sanctioning Russia on Friday. So we saw that was a reaction. The major reaction that happened on that Friday was the sanctioning of the euro sanctioning Russia. So it really came and it affected the market. So that was the cost of the pullback. So, but right now, if we are looking at our chart from the weekly chart, we could see that, let me enhance this. We could see that our pullback is not yet complete. Okay? Our pullback is not yet complete. And we could also see that price gave a swing, a whipsaw. This is what I call a whipsaw. You can see that the last candle which has formed a reversal candle right now, it has formed a reversal. This is a reversal candle. But why I'm saying that this might not work as a reversal candle is because it's at a ranging level. And if you also watch, you see that market is still inside the channel that we talked about last week. It is inside the channel that we talked about last week. So invariably, there's a possibility that this might happen to turn to be the reversal candle that will pull price back to break this level before we can now say that price has come back to bullish terms. Okay, but for now, you can see that this reversal candle here, this engulfing is still functional, is still active. So we should still be expecting our price to be coming down to this level, 1968, 1915. Okay, so also we should also remember that this trend line that price has broken has not completed its trend line rule, which states that whenever trend line breaks, there must be a pullback to the trend line to turn this trend line to be the support and then pull price up to continue the up move. So if you look at that rule now, you see that this trend line has not completed, the price has not completed its role on this trend line pullback. So we should be very careful, though that we should also mind this reversal candle and also listen to fundamentals. Listen to fundamentals, because what is causing all these things now is the fundamentals. And you know that fundamentals can pull back any price. I don't want to know where the price is. Even if a trend is down, fundamental can change it automatically to be an uptrend. So we should be very careful. And especially now that we know that there are a lot of uncertainties happening all over the world. So it's really affecting. Investors are pulling out their money from any country that is having issue, pulling their money and looking for safe haven. Like I posted in my group, there is some information I posted on the group that we saw that there are 3 key safe haven pairs right now. We have gold, we have oil, and we have dollars. These are the 3 key safe havens right now. So watching this now, we could say that this reversal candle here that just closed as of last week, nobody knows what is going to happen this coming week. Though that we have fundamentals, which everybody is expecting that the US fundamentals will favor the US, being that everybody is expecting that the GDP is going to grow, they are going to recover. So if US should recover, then the next thing that can support the GDP is now, if the uncertainties that are happening all over the world something like are having a slowdown, that means dollar will take control. But whereby it doesn't slow down, we should be expecting our safe havens still taking place, taking the activities. So invariably, we should be very careful because this is a reversal candle, and this reversal candle is inside a channel of the ranging level. So invariably also, we should not neglect this support 2042. You can see that it was a swing and price closed above it. Okay, so price closing above it. So we should be very careful. Anything can happen. Price can come and open on Monday and shoot up and break through this level. Okay, if price should break through this level, then invariably we can say that the bulls are coming back. The bulls are back when they break this level. But whereby price did not break this level, we should be expecting our price coming down to 1915. Okay, this is the weekly. So let's go to daily now so that we can see clearly. Looking at this daily now, you can see that as of last week, I could remember I told us that we should watch this step up trend line, because price was at this level when we drew this trend line. So we see that we had a breakout from this support, from this step up trend line, and now look at what happened. The trend line rule is taking place. It's taking place on this trend line. You can see that price broke out and breached the 2042 level, and now see the next price now opened, could not continue down, and moreover look at this is 200 SMA. 200 SMA. This 200 SMA now turns to be the support. As you can see, even the price that broke, even the price that break through the 2042 area could not break through the two SMAs, the 250 SMAs, which automatically turned to be the support. Okay, you could see that it turned to be the support and now pull back price. And you can only see that the next day price, which been on Friday, the next day being on Friday, now open and could not even break, could not touch the 50 SMA and now pull back, but it breached with a whipsaw at a 200 SMA. And see what happened. Price pull back. Now, if you look at this now, you will say, okay, these two SMAs now turn to be the support and resistance, the support which pull back price. And also remember that whenever you see a breach of support and resistance, that we should be very careful, because this breach now confirmed that this market is not yet over, that the bulls are still fighting. But now if we follow the trend line rules, you will see that this step up trend line has been completed. The break has been completed. So we should be expecting price, if price should open next week, we should be expecting price to go down, because this price went and touched the trend line. Let me enhance it so that we can see clearly. You can see that this price went and almost touched the trend line. Okay, almost touched the trend line. But there is something I want us to see also. As we are looking at charts, we should always be vigilant. Look at this chart now. You can see that this candlesticks here now has formed what I call an inside candle, which is a reversal candle. And if you look at it, it is at a low. It is at a low because this is the low, the previous low, and look at it came and formed a reversal candle below, bridging this low. Okay, bridging this low, forming its new low, and now having an inside candle. So there's a possibility that market might also open. Market might also open and disobey this step up trend line rule, which states that market will pull back to trend line and then fall back. So there's a possibility that market will open and break through and head to this level. Okay, head to this level or this level. 21.31, then 21.45, 43. So if market should open by Monday, we should watch what happens. If it's going to be a jump, If market should open jumping up, we should be expecting price to be going down. But if market jumps down, oh my God, we should be expecting price to pull back and then go to break this trend line, this step down trend line right here. We should be expecting price to break through it, break through this trend line, also this step up trend line. So we should be very careful and watch what happens on Monday. Remember that I said that on Monday we are going to see a little rally, being that we have a little fundamentals on US coming out from US. So we should be very careful. One is, note that this is a reversal candle at a low, because this is coming down at a low. Also note that we have a break, step up trend, support trend line break, which has completed. Now on the completion of this pullback, we now have an inside bar, an inside candle, which is invariably also a reversal candle. So now also we should also note that price breached 2042. Remember what we are talking about is silver. Okay, silver. So with all this that's happened now, so we need confirmation. What we need now is confirmation. If price is going to go down, okay, if price should go down, then that means we should be expecting price. If price should eventually go down, we should be expecting possibility of buying at this level, 2056. Okay, 2056. That is if we see a reversal candle at 4 hours chart. Note, that is if we see a reversal candle at 4 hours chart. I'm not saying that you should buy at this level. What I'm saying, that possibility of buying at this level. Why am I saying that? Why I'm saying that is because this is a reversal candle. There's a possibility that this reversal candle might function to be doing its work. Also, my reason of saying to buy is that this is a low. Okay, this is a low. Though that we are expecting price to get to this level, 1950. Okay, 1950, being that it is a resistance level. Okay, is a support level. Okay, but market is uncertain as of right now. There is a lot of tension in the market, and we could see that investors are pulling out their money looking for safe haven. A lot of problems everywhere. Libya having issue, oil is in trouble. We are seeing that Russian case is not getting any solution right now. Sanctions still going on. So if you look around, you see that possibility of people still rushing back to commodity, safe haven commodities, is almost 80%. People will not want to risk their money investing in a country that had a lot of issues. So we should be very careful on this silver. Should be very careful. Now let's look at 4 hours. As you can see from this 4 hours chart now, we can see clearly. We can see everything we are talking about in daily clearly in 4 hours. Look at these 4 hours now. This is a hammer with a long shadow. A hammer with a long shadow. Bridging 2042, which is a key support. Also a low. Okay? A low of the previous hammer. So now, price could not continue going down. Formed a reversal candle at this level and pull back. And we also know what is the cause of this pullback. It was because of the sanction that was given to Russia. That was the help of this pullback. Okay, there was not much thing that happened last week. It was just that sanction that happened that made this price to pull back at this level. Though that if we are looking at it technically, we can see that this pullback was meant to happen. It was meant to happen because this was a breakout from a trend line. You see that this blue line now is the trend line. You can see that we had a whipsaw at this level, which price went back Now later the price now break through and now giving a hammer reversal candle at a low. Remember that this is the low, and now it has a reversal candle formed at the ladder low. So now put back and look at it now. This has almost completed, almost, because this has not touched this trend line. So we are expecting price to first go and touch this price before coming down. Okay, but whereby price did not touch, whereby price breakthrough, that means it's going to nullify this trend line. Remember, we have a trend line here, so there's a possibility that price might come to this trend line and pull back. So we should be very careful. Monday will be a day to confirm our trend, so we should relax, not hurry to enter the trade. If you really need to trade it, please go to 15 minutes or 1 hour, look for breakouts and then trade it. But if you are a long-term trader, we should relax. Monday is a day that we use in confirming our trend. We allow that candle to close in order to confirm where our trend is going to for the week. So there is no much thing to say on this silver. We saw that price is still ranging. Price is still inside the channel ranging, being that the reversal candle could not push the price down due to there was a fundamental that pulled back the price, now forming a hammer inside the ranging level, inside the ranging channel. So we should be very careful. Then on the daily, we also saw that price has pulled back, completing the trend line rules, and also we could see that it was a reversal candle forming at a low. Okay, we also could see that the price breached a resistance, a support level, which is at 2042. So we should be very, very careful. Anything can happen at this level. Remember that I said, if you look at 4 hours, you will see that the trend line price is obeying the trend line rules. So we should be expecting price invariably might open and then go to this level. Go to this level 2089 and then pull back. So we should be very careful. But whereby that line is this trend line is broken, then we should be expecting nullification, which means if this price is broken, we wait for the candle to close and then the pullback to happen before we now take our position for the bulls. Okay, so we should be very careful. Now let's go to oil. Let's go to oil. We can see that on our weekly chart, if you look at our weekly chart, you can see that we have some little some little things here. Sorry, I'm trying to correct some things here. Now look at our weekly. Look at our weekly. Exactly. Thank you. There's something I want to show us here. This is just exactly what is happening in the daily chart of the silver. Let's look at it. Let's look at it. Do you see this now? Look at this now. This is exactly the same thing that is happening in this chart here, on this weekly chart. Okay? This is a support. If you watch also, you see that there's a support here, which price breached. Okay? You see that the price breached this support. So, this is why I keep on telling people that Forex is a cycle. It's something that anything that you see, study it, it will happen again. It will definitely happen. The only thing is, do you know it? If you know it, you will be able to study, you will be able to know what it is going to do. Look at this now. Is this not the same thing we are seeing in silver? Now, somebody will look at this and say he's going to be buying. Did you see what happened? Had it been that somebody who saw this and then on Monday, on Monday of the new week of this candle now of this last week, the person now went and placed a buy. Did you see that he could only take about 30 pips or 36 pips before the market now returns back to give almost 200 pips down? This is why I always say that we should be very careful. Trend line, market respects trend line. Look at this trend line now. Did you see that it was just the same thing we just discussed on silver right now? That price just broke through the step up trend line and now respected the trend line rule and came back and give us our trend line completion, telling us that price is telling us here that he is true with this trend line. But being that we also know that this is a reversal candle, an inside candle, which is also a reversal candle, but where this is not a valued reversal candle is because it is inside a range, inside a ranging level. Look at this now. You can see that 104.61 and 99.00 is a channel where price has been dancing. Okay, price has been dancing inside. So we could only see this whipsaw that happened here and formed the reversal candle and came back inside again. And now having this channel, this step up trend line forming here, and see what it did. It gave us a reversal candle. So now, like I always say, patience is the key to trading. Now, if on the day had it been that I was trading this and I see this reversal candle, I will wait for Monday to close, because when this thing was going up was on a Monday. It was going up. So after the Monday, maybe after the US close, that is when I will now see what was going to happen to this. Okay, so looking at this market now, you will see that reversal candle here has formed. Now the confirmation, if that this is a reversal candle, now we are supposed to expect a confirmation candle. And look at what the confirmation candle is giving us here. Now giving us also an inside candle again. Inside this bullish candle, you see that the open, this was a gap down. Okay, look at the open below the close of the upper week, and look at the close of this candle now. Inside the low, it didn't even get down to the low. Inside, just a few pips above, below the open. So this is an inside bar. So what we should be asking now is, since this is also a reversal candle, what is going to happen this coming week? What are we expecting? There's a possibility that this thing that is happening here is telling us, because if you follow the root of candle, we will see that this thing now is telling us that that price is expecting to fall, because this is an inside bearish candle. So invariably we should be expecting price to fall. But anything can happen. Remember that oil has been moving not because of the technical analysis, but it has been moving with the fundamental analysis. We saw that the pullback of this candle was the shutdown of the Malaysian plane, which caused this to go up. Okay, we also see that this pullback also again now is about the sanction of the Russian, the European sanction that they sanctioned Russia. We saw this pullback also. So you can imagine that market is not really following technical analysis on oil. It is all about fundamentals. So we should be very, 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 very alert on our fundamentals, because it is the key to trading right now, because market is not stable. But if we follow technically, we should be expecting price to break this level and come to this level, 97.32. That is where we should be expecting to buy or we wait and see what happened there. If it's going to break this trend line, then we'll be expecting price to get to this level, which is 91.27 level. Okay, so we should be very, very careful. This is weekly chart. Let's go to daily so that we can see clearly. If you look at our daily, one, you got to look at the SMAs. The SMAs turn to be the support and resistance. The 50 SMA is the resistance, while this 200 SMA is the support. And you see that price is inside it. Price could not break through. Though that what we should be expecting here is an up move, because the 50 SMA is above the 200. So invariably, with this trend line now, we could see what is happening here. Price is really expecting this trend line. We saw a little whipsaw here. This is the reversal candle. Okay, this is the reversal candle, which we are expecting price to pull back to this level. Okay, remember that, just mind you that, note that this price has hit this resistance, this support level and pull back. And why was that? Because of the sanction that was levied on Russia. That was the cause of that pullback. Because I could remember that if you are in my group, you will notice that we had a signal that hit TP. It just immediately the TP hit, we now had that news and we saw how fast market returned back. Okay, market pulled back with a spike. So we should be very careful. We should still be expecting. Remember that this is the reversal candle also. This is the reversal candle. But fortunately, this is an engulfing candle, which engulfed 1, 2, 3. Okay, don't forget about this reversal candle here also. So this now and this joining hands together will pull this price back, except if the fundamentals should overthrow all this technical analysis. So we should be very careful. We should still be expecting price to get to this level, break through this level 99. That this 99.00 is the key level to watch. So we should be very careful. Remember that anything can happen. We should concentrate more on our fundamentals and also follow our technical analysis carefully. This is a trend line which price is respecting. So if it should break, we should be expecting price to be getting to 104. Okay, so we should be very careful. Let's look at 4 hours. Now you can see 4 hours very clearly. Let me minimize it so that we can see clearly. Okay, so we can see clearly. Now, if you look at these 4 hours, you can see that we have a down channel. This is a down channel, and we saw price touch 99 level, giving us a reversal candle and pull back. Now break through the resistance. This was happening last upper week. Now price now breakthrough, gave a pullback which breached the RTL. Now could not nullify it, and now went up again, and we were seeing a lot of dancing at this level. Now price with that came and completed the pullback. Okay, possibility of this being the completion of the pullback is, let's say, 70%. Okay, because all these things we are seeing here is the work of fundamentals. So we should be very careful, very, very careful. There's a possibility that this trend line now will be nullified, and also there's a possibility that this reversal candle that we are seeing here now might be what will pull price to take price from here to 104 level. So we should be very careful. What we should note here is that this resistance and support and resistance that is bridging this price is what we should be watching. Look at this is also a support and resistance to watch also. That level now is also a support and resistance to watch. So we should be very, very careful. Price is uncertain right now because of the uncertainties that are happening all over the world. So we should be very careful. So if we cannot have patience to confirm, please go down to 1 hour, 15 minutes and trade breakout. Okay, trade breakout. Now let's go to gold. Or with the conclusion of oil, let's just recap on what we have just said. On oil, we could say that there's a possibility that we should be expecting a down move. Also, there's a possibility that we should be expecting an up move. Should we be expecting an up move? Because of the uncertainty. Why should we be expecting a down move? Because of technical analysis. Okay, so now we could see that price is 50-50. So we should be very careful. Looking at our chart, we can see that trend line completes, trend line break completes, reversal candle formed, then confirmation candle forming another reversal candle, which is now indicating that there's a possibility of a down move and also there's a possibility of an up move. Okay, now if you go to daily, you will see that trend line completed, trend line breakout completed, price respecting trend line to do the normal thing it's supposed to do by moving down, but fortunately fundamentals is making it to rock up back. So we should be very, very careful. Look at this trend line, is a trend line to watch. We should watch this trend line and be very, very careful with it. Watch it closely, because a break of this trend line is taking price to 104 level. So if you look at our 4 hours, you can see that our 4 hours has completed its trend line break, but price is still dancing along the trend line, along the support, along the resistance trend line, on top of the resistance trend line. So anything can happen. But we are having a reversal candle closing last week. So this reversal candle here is an inside reversal and an inside doji with a big body. If you can watch, this is a long shadow. This is a long shadow. We can call this a doji with a big body. Now you see the confirmation candle here breaking this resistance also. Okay, support and resistance which at 101.87. Now closing above it. So there's a possibility that if price should open by Monday, we will be seeing price rocking up. So anything can happen. But remember that we had some things that happened this weekend. So we should go and read up and know what happened with the OPEC meeting and all that happened this weekend. That will be the thing that will help to push price. Okay? So we should be very careful. Make sure that we take a good decision before making our entry. Thank you. Let's go to gold. Let's go to gold. Now we are in gold. You can see the weekly chart. If you look at this weekly chart now, you will see that price, we still have our head and shoulder intact. Look at our head and shoulder. This is the head, this is shoulder, this is the shoulder. It's very, very still intact. And this pullback that is happening here with the break of this trend line, you can see that it could not, price is fighting to nullify this trend line, but could not, due to the fundamentals that are happening around the world. On a normal day, with this reversal candle that is here, we are supposed to be expecting price to get to this level, even to this level. Okay, 244.63, which is on top of the trend line. Okay, so but with the fundamentals and all the things that are happening around the world, we could see that price keep on dancing on top of the support, on top of the step down trend line, though that it has not proven that this reversal candle will not complete its job. It has not proven that. Okay, so we should be very careful. There is no much thing to say here. The key places to watch for this week is 1344.70, which is, if price should break it this week, we should be expecting the bulls continuing their journey. Okay, but where price did not break it, we should be expecting still down move. We should be expecting the down move to complete, at least to 1268. Okay, 1268, 1263, sorry, 1263 level. Okay, that is where we should be expecting price, at least for price to hit and then reverse possibility. Okay, so we should be very careful. Then if we go to daily, if you look at our daily, oh my God, look at our daily. If you look at our daily, you will see that there are certain things when you hear people say it, you will say, what are they talking about? Can they go to the chart and look and see what is happening there? Yes, we have an opening. This is, all this that you are seeing now is an opening for our profit. Down move. This is supposed to happen because if we follow the rules, look at this now. If I draw this, I just want us to get something right now. Look at this now. Okay? So now, if eventually that we should be talking about price going up. This is the level where we're supposed to be talking about price going up. Do you see that our 1277 is still intact? Our red zone area. So if you look at this now, you see that this is the key support here. This is the key support, which invariably price will want to respect. But if you look at this now, you also see that this is a trend line which price has broken and really has not completed the trend line rule. If you can watch this, if you are watching this, watch closely. Remember I said trend line states that whenever a trend line breaks, that there must be a pullback to the trend line, either to form a resistance or form a support before it continues its move. So right now you can see that there was a ranging at this trend line and finally price had to break. Now price has broken through it. So invariably we should be expecting price to go back to touch it in order to complete the trend line rules. Look at this. This was a bridge. It broke through it. Okay? It broke through it, bridging it. Now formed the reversal candle and went back inside, trying to nullify this, but could not nullify it, formed the reversal candle, now break through it again and now came down. Invariably we should take this our trend line now to this level. So if we should take our trend line to that level, you will see that price has completed the trend line rule. If price have completed the trend line rule at this level, we should be expecting by next week that by this week that we are entering, that price might open and would rushing down. But don't forget that price formed a reversal candle. Also note that this reversal candle that was formed here now was formed, if you look back, you see that it is a level where price ranged a lot. So this reversal candle might not mean a lot. So we might see price shooting down on Monday. Okay? So we should be very careful. Let's look at 4 hours. Sorry, let me just clear this so that let's look at 4 hours. Let's look at 4 hours so that we can see clearly what we are talking about. We have a lot of lines here, but I'm going to explain all of them so that we can understand it. Now, remember that we still have our red flag zone intact. Okay, we still have our red flag zone intact, which is 127700. And now we saw what happened. We saw what happened last week. Look at price trying to nullify this trend line, but could not. Came down again. You could see that. Remember, I said that a trend line is formed where two shadows, lower high or higher low, meet. Lower high or higher low meet. This is a lower high. So now these two lower high form this trend line. And if you watch along that trend line, you see that price has been respecting it. Except this price now that has broken through it, bridging our support and resistance, key support and resistance 1305.78. So looking at this also, you can see that there's a trend line, a small trend line that has formed here, and you can see that price break through that trend line, and now is respecting it also. So we should be very careful. Two things are happening here: a break at this trend line, this step down trend line, price bridging 1305. Okay, price bridging 1305. Remember that this trend line here, this trend line now, price break through it, and now is reversing back upwards. So if price breached this level and also respecting this trend line, okay, now we should be expecting that with this bridge at this level, anything can happen, because there's a possibility that price might open on Monday and then would close to form a reversal candle at this level. Now, coming to nullify this trend line, then price will now be heading to 1277. Or being that also that we know that what is pulling this price back is the sanction of the euro sanction against Russia. So there's a possibility that by Monday, investors will be wanting to digest it, and now we will be seeing price heading back to this trend line. So this level now, 315, is to be watched closely. 315 is to be watched closely. If price should break 315, then we should be watching this trend line at 320, 321. Okay, 320, 321. That is where we will now be expecting price to hit. If that should happen, that means we are having about 126 pips. Okay, now if price should hit at this level, we should be very careful. We should wait and confirm if it's going to break in or if it's going to form a reversal candle. Whereby it did not break in and forms a reversal candle, we should be expecting price getting down to 305. And at 305, something might happen at this level. So we should be very, very careful. There is a lot of uncertainty happening around this area. So though that we have a lot of fundamentals this week, which everybody is expecting that it should favor US, but I always I like being objective. I like being open to my trade. So I would like everybody to be open, because if you go and say that it will favor the US, what if it comes out to not to favor the US? By then you are hoping that you are going to be buying. You are going to be buying dollar, and unfortunately it happens that it's not going to favor US. What will you do? Your mindset is already that you are going to buy dollar, and unfortunately if it doesn't happen, that means you are not going to be in the right trend. So we should have an open mind in trading. Okay, we should have an open mind. Let's all stop fixing that this is what we think that will happen, and if eventually it doesn't happen, now we will be feeling sad and we could not make a good decision. But where we have an open mind, looking at our chart, waiting for the fundamentals to happen, and then having a decision after the fundamentals, that is where we can make a good decision. So with all this that we have seen in these charts, we could only say that we should allow Monday candle to close in order to give us a right direction of where our trend is going. Okay, like I said on the weekly, price is still ranging on top of the resistance level. So with a reversal candle formed, so we should be very careful. There's a possibility that this next candle that is coming might want to nullify this reversal candle. So we should be very careful. It's also possible that this next candle that is coming might want to break down and nullify this trend line. So anything can happen. We should be very careful. On the daily, we could see that the trend line has broken but has not completed its rule. So there's a possibility that price will want to come to this level. Price will want to come to this level, 1320 level. Okay, 1320 level to complete the trend line rules, or break it. Then if it comes to 1320 level, we should wait and confirm the reversal candle. There's a possibility that price might equally open and pull down. So we should be very careful. Monday candle will be a key candle to watch. So on 4 hours, we shouldn't be deceived with what we see, we shouldn't be deceived with what we hear, but we should concentrate on what we see on our charts. So with this now, we already know that the last candle now breached a key resistance and support area, which is 1305. So we should wait and confirm what will happen. Also remember that we have a trend line at that level, which candle also breached. So we should wait and watch what happens. Okay, we should wait and watch what happens. That Monday, that first candle that will come out will confirm, that first 4 hours will confirm where our trade is going to. So we should be very careful. Right now, I'm expecting gold to go to 1320, then pull back. Or if it breaks 1320, it's going to go to 1330. And 1330 might hold it a little, or it will go straight to 1337, which is also a trend line. That is, if this candle here, the next candle that opens, should confirm this breakout. So we should be very careful. Whereby it did not confirm it and forms a reversal candle, that means the bears will take control. And we should be expecting price getting down to 1290, and then we should watch that level again, because it might take a little while before it now breaks down to go to 179, 78 level, and then 177. So we should be very, very, very careful. We should be very careful. So we should remember that we should focus on our fundamentals this week. There are key fundamentals coming out. Remember, GDP is coming out. We have non-farm payroll. We have job rates coming out from the US. These are the key ones. Then if you come to the EU, you will see that there is a lot of fundamentals coming out from Germany. There's also key EU data that are coming out on Wednesdays. So please, we should concentrate on those things. Try and know what the fundamentals are saying, so that we can be able to make good decisions on where our trend is going. I pray that this helps us and we should make a good decision. Thank you.